Hello, and welcome to the Consistent Profits Podcast, brought to you by Inside Out Trading and Brian McAvoy, where the focus is on consistency. Because when you have the consistent part down, profits become easy. Hello, everybody. This is Brian McAvoy with a new episode of the Consistent Profits Podcast. I'm excited today to be interviewing Saul Lokier, CEO and Senior Portfolio Manager at thefibers.com. Thanks so much for being here today.
Thanks, Brian, for the invitation. Excited to be here.
Yeah, indeed. Glad to have you here, man. For those of you that are not already familiar with Saul, he's a talented Forex trader with years of experience, over 10 years. He lectures in many recognized forums such as investing.com and FX Street. He also manages funds for International Proprietary Forex Funds as well as his personal accounts. And I like how you got this on your site. This guy eats pips for breakfast. Thought that was pretty cool. Yeah, again, Thanks for being here today, man.
Yeah, thank you.
Yeah, indeed. Well, so you've been trading, you said it's actually over 10 years, like 12, 13 years, you said?
Yeah,
Yeah, go ahead.
No, sorry. I met trading. I met this opportunity of making a side income with trading in 2010. And then since then till today, been trading.
Nice. Well, so what were you doing before trading?
I was studying and I was doing, I was working in a hotel in the reception. So I was doing like night shifts, and I was looking for an extra income. And then I came out with some ads from brokers, I don't think it's legal anymore, but just invest $100 and use leverage to to create an income and all of that. I didn't understand a word. And it took me like a 2-year process in order to make it, to finally understand what it's trading about. There wasn't the amount of information available today back then.
Right.
So it took me like 2 years to actually make it and understand what I was doing and to make it, like consistently. So since then, I've been, making trading one of my main sources of income. So,
so you said you were studying. What were you studying?
Courses. My degree was in education.
Okay.
And I did like some courses and like courses in finances, of course. And that was.
Well, so that was your intended degree was education, though?
Yeah.
Oh, okay. Before you found trading, so when you started into school, what did you envision for yourself, starting school, learning, getting your education degree? What did you originally intend to be doing after school?
Yeah, so my two passions were finances and education. So I thought maybe I would teach, finances or, like like Robert Kiyosaki tricks,
Oh,
like the kind of like personal finances and that kind of topics. But then I never did that. So I discovered trading, and that was like mind blowing for me. So
right.
yeah, never thought.
Oh, very cool. Very cool. Well, now, of course, with trading, you got pulled into through some ads with brokers, um, and you've been in trading pretty much ever since then, all right?
Yeah, I have.
Okay. Um, Now, before you started at the Fibers, you were you trading by yourself, or were you? No, you were a funded trader with Apiri funds, correct?
Yeah. So I have some losses, and finally I came up with this company, the US company. I don't know if they're around anymore. The Apiary Fund. So
Mm-hmm.
they used to teach you how to trade, and then once you pass a certain amount of assessments and courses, then you would apply to become a funded trader by them. And that makes sense. That makes sense for me because it wasn't their best interest to teach me how to trade properly, because I will be managing their capital afterwards.
Mm-hmm.
So that's how I learned how to trade, and then I got funded by them. I started managing their capital, and I also opened like personal accounts. Later on, I raised capital from investors and family and friends, and that's how I grew my portfolio a little bit, with different accounts. And then years after I met the Fibers, the company. I didn't found the company. It was founded by Gil
Right.
Ben-Hur, 2016, and then I joined in 2020. I joined the company, and I grew inside the company, and today I run the operations.
Yeah.
I run the company. Yeah.
Yeah. Very nice. Well, so as far as what you guys have going on at the Fibers, so one thing I like on your site, you got entire sections in your navigation. You got one devoted to strategy and one to psychology, which of course are both important.
Yeah.
What's your personal opinion as far as which is the more important, though?
I think it's not the strategy. That's for sure. I think there's a lot of strategies, and many strategies have the potential to be profitable strategies. It's just who's the driver, right? It's not the car. It's not about the car. It's about the driver. So who's applying that strategy? So I think it is relatively simple to find a strategy. Then it's a more complex process into adapting that strategy to yourself, to your reality and your own situation. Where do you live? What's your risk appetite, and what's your time availability, and all of that. Like really, tweaking the strategy to tune it into yourself. And then there's the risk management and the psychology aspect, which is the most important, because that's when, if you don't have a proper risk management, it will be very, very hard to, manage your emotions. And without management, managing your emotions will be very, very hard to avoid, large losses, and avoid over trading and over leverage and all of that. So I would say strategy is the least important, and then risk management and psychology, they really come like together, being the most important aspect of trading.
Oh, very cool. Very cool. Yeah, and I would agree with you. Strategy. Some people, they think strategy is like that's where to focus all the time, and it's like, nah, it's not at the top of the list, really. So, yeah. Speaking of risk management, I'm glad you brought that up.
Yeah.
I saw that what was it, a couple months ago that you did a demonstration live as far as basically saying, that risk management really is the most important thing, and so you were entering trades randomly just to prove that, yeah, through risk management, you would be profitable. So, how long did you run that? And can you share some of the, what you did with that and some of the insights that you gained?
You've been spying, Brian. You've been following. Yeah, so I think if we're speaking about the same exercise I did, that was based on the hypothesis that trade management and risk management is more important than the strategy or the direction you pick in the market. So basically, two profitable traders, they can trade the same asset, different directions, and they can make money. So like two advanced traders. So that's what I attempted to do. So what I think on risk management and trade management is that we need to start small, our positions. Okay, well, we need to build a position. We shouldn't be allocating too much in one single entry in the market, but we need to build our position slowly, which is kind of similar to what institutional traders do. They need to push a lot of billions of dollars in the market, and they don't do it in one trade. They need to build their orders in the market. So it's a kind of the same exercise, but in the retail, as in a retail approach. So the idea is to, through active management of the trade, scaling into the trade, scaling out of the trade, you can come up, on top and profitable, besides the direction you pick in the market. So that was like kind of the exercise. And every time I've done it, I think has been successful. But if you just start into trading, can be a bit complex and overwhelming. But that's the idea.
Yeah, it can be an interesting exercise. I had to ask though, because I've run across other traders. One of them I worked with years ago, and it was funny because I mean, yeah, he was the same thing. It's like the entry really doesn't matter. He's like everybody just focuses, got to get that perfect entry, and it's like
Yeah.
no. He says the trade management's where it's at, and so yeah, he had a totally random entry system. He had everything down on a piece of paper as far as the different markets he could enter, and he would take his finger and he would go boom. That's what I'm gonna trade. He'd flip a coin to say that's the direction I think the market's going to go, and he would enter the trade.
Yeah.
And it was cool because we got him profitable as far as laying out, detailing a system and being able to get the consistent execution. That was the other thing though, is you can do it, but with any strategy, it's in the consistent execution of it.
Correct.
So, but yeah, and like I said, his whole point was the entry doesn't matter. And I thought that was so cool. And when I saw you did that, I had to ask you about it. So, yeah, that's awesome. Well, so having been at this for a while, and you worked with the Perry firm funds, and you've also been with the Fivers for a little bit. Um, you've had a decent amount of experience in the trading world. You write, you post blogs and articles, right?
Yeah. Um, less these days, bit less, but back in the day, I used to write a lot and do a lot of webinars, and yeah.
Well, you ever thought about writing a book? If you were to write a book, what would you write about?
Um, I'm not sure because I started, writing one a couple of years ago, like started with my own, my own story, how did I started and the lessons since then. And then at the end, I don't think I have new things to say that's not written somewhere. I haven't invented something new in trading. It's just being disciplined and following certain models of risk management and psychology and focusing on certain things. But it's something new, or it's like something that I created. You know what I mean? So I don't know. I said to myself, okay, let's pause it right there. Maybe in the future I'll have a different, side of things, and I'll come back into that. But that's what I stopped it back then. I think probably today, being in the funding side, so already being a retail trader and also now managing a fund, now I have some insights that all retail traders and maybe educators they don't have. I have like a different perspective
Yeah.
of what, how traders behave, for example, or what's a different kind of trading, because now we do a lot of, I do my own personal retail trading,
Mhm.
but sometimes we need to do like speculative nostro trading, in the firm. And sometimes we need to make hedging trading just to, hedge the exposure of the firm. So now I've been exposed into different aspects of trading that I wasn't, exposed when I was just retail trading.
Yeah.
So today I might have something to some value to give today.
Oh, very cool. Yeah,
Yeah.
actually, that would be excellent, and particularly being on both sides of the funded trading. You probably already have some, yeah, very useful insights because, prop trading, it's been around for a while. It's
Yeah.
only gotten recently really popular, though.
Correct.
And so there are a lot of people entering the space. So your experience and perspectives from different viewpoints within the space, yeah, would probably be very helpful.
Yeah.
Because I know there's some traders, they view the funded or the prop firms as just a bunch of sharks. Yeah, they're just looking to churn and burn everybody, not really caring. And it's like, well, no.
Correct.
So yeah, being able to shed some different light on things, and particularly because I know a couple other guys that run funded firms, prop firms, and I've learned a lot in talking with them just because when you're on the other side of it, you have a different perspective. I mean, some do run it like a casino where it's like, don't care. It's just a numbers
Yeah.
game. Others, you got a whole different perspective on it. So we'll circle back to this. But yeah, I think that would be really worthwhile as far as, when you do want to write a book. Yeah, that would be a good one to put out there and very timely. Because of the way the trading space has changed over the last few years.
Correct.
Right along with that, the other thing that, of course, is a topic of conversation, especially over this last year, is AI. And you're also you've had some good exposure to algorithmic trading, right?
Yeah, not myself, but I've never run algorithmic trading or something.
Okay.
But yeah, but there are traders within the fund that
Okay.
use it. Yeah.
Well, so where do you see AI? What do you see as its place in the trading space as things move forward? Is it going to be where people are just having their AI trade for them, or is it going to be like AI assisted human trading, or pretty
Um,
set off? Not at all. Still mostly.
yeah, I think it's going to be, there's a phrase about AI that AI will not change people or not substitute people, but it will, people using AI will substitute people not using AI. So probably with trading, it's going to happen something similar. Because I think AI will be able to give, especially the one that's connected, the latest versions of AI that's connected already to what's going on in the market right now. It can give you a lot of insights of market sentiments and forecasts and all of that, and traders may use that into their trading activity.
Mhm.
In terms of AI taking trades and being profitable over time, I don't know. Eventually it might come. I don't know how soon. To be fair, I've seen some demonstrations, and it's not there, and it's not even close. It's the same challenges every algorithmic trading faces. The fact that the market changes, and it turns from ranging to to trending to low volatile to high volatile, and I don't know if AI is the AI will need to be able to adapt fast enough in order to not lose money and know when to switch from strategy to strategy
Mhm.
when the market context changes. So once that's in place, there might be some opportunities there for AI making trades.
Gotcha. Okay. Yeah, very cool. Um, well, now switching back to the 5 percenters and your site there. I know one of the things that you focus on a lot there, and especially going back just a little bit, you guys have made it a big focus to really help traders succeed,
Correct.
provide the community and everything there, and like even in your like your yearly recaps, which I think is very cool that you guys publish that on your site, is
Yeah.
the yearly recaps. So, well, now one thing that you had done that I wanted to ask you about, I thought was kind of cool. You said in your 2022 recap, you said we had a very exciting year in the fibers, but we had very successful projects through the year. We started the year with a new program which was the freestyle, where we attempted to measure traders by performance factors, not by profit and loss. It's an
Correct.
interesting and good experiment. However, we needed to pause it because we figured out that we were funding the wrong traders. Some traders were using factors differently than we thought so. So when I read that, I was like, yeah, I got to ask about that. So what kind of performance factors were you looking at, and why do you see, why did the things go the way they did, do you think?
Yeah, so that was a pretty cool program,
Mhm.
um, which I think if we were about to launch it again, we would succeed this time. We would have to think about it because we learned a lot that we didn't know when we launched it. But the idea was to basically to measure how deep is the drawdown that a trader goes in the account in order to make a certain amount of profit. So if he's making and we call it the performance factor or something like that. So if a trader is going into a drawdown of, let's say, 10%, we expect from him to make at least 20% or 30% on the account.
Yeah.
So that's the ratio between drawdown in the account and the profit he's capable to make. So that was the way that was the way we perceive the, the the account. The challenge was, and traders always do, they always trying to bypass the rules and the parameters and everything.
Mhm.
That first there wasn't a maximum loss at any point, which was a mistake. And the second one, that traders were placing small, like tiny trades, micro lots.
Right.
So the drawdown was minimal, and then a tiny profit percentage wise would be enough in order to be considered as the ratio we were looking for. So so that you would see a lot of traders trading micro lots, and then once funded, they will open 100 lots,
Yeah.
and just blow the account, and and we will cover all those losses. So we just decided, okay, we need to stop this. We carry on. There's still traders with those accounts because we didn't stop those who registered. We just closed the registration. So we will have to figure out how to close those gaps, and then we could relaunch that. But it was a good attempt. We just didn't know things we know today.
Okay. Well, so how's that different? You said you're measuring traders by performance factor. So it's like the ratio.
Yeah, that ratio that
and not by profit and loss. So
correct.
I mean, because most prop firms, they say, yeah, these are your goals we want you to hit in terms of dollars or percent of the account. And yeah, you've got a maximum drawdown. Now, do you guys use a fixed drawdown where it's like just wherever you're starting, you can only go below a certain level, or do you use more what's effectively like a trailing drawdown?
No, we don't have a trailing drawdown. So if you have like a 10% max drawdown, it stays there. If you grow, you can, the maximum loss is still below the initial balance. So it's like a balance-based drawdown.
All right. Very cool.
Yeah.
Now, so what goals did you have set out for 2023? How'd 2023 go as far as, initiatives that you had for this last year?
Yeah, this was a great year. We introduced the two-step program, which is a very popular program in the industry, and we didn't offer it. We used to offer the one-step program, which is our flagship program, and we ran with it many years. But there was a massive demand for the two-step program, so we introduced that. So that was very well received, and then we launched our stocks brand, which is Trader Pool. I believe you had a conversation with Michael, who runs the Trader Pool. Yeah, Michael Katz. Mm-hmm. So we introduced that as well, and then of course there was a lot of infrastructure work in order to make all of that happen. And then there was a huge amount of companies coming into the industry. And not long ago, a couple of months ago, there was the shutdown of one of the largest ones. I don't know if you were aware of that, but one of the largest companies was closed by the CFTC. And of course, many traders came to us and discovered us. And we've been investing, a lot of this year. We invested a lot in our traders, a lot in terms of, I see our risk department as a service to our traders, because if we have a strong risk department, we can allow our traders to do more things. Okay, we can be, we can work better, and we can allow them, better conditions. So we introduce new assets, and we develop some resources for them, and we invested a lot in our community. So our community is a place where there's no external, traders. You have to be active with us, and there's a community manager there, and we do like daily calls with them. So we really try to, the traders who want to, to get it, but we offer a lot of value and resources in order to try to make our traders better, because at the end of the day, they will be managing our capital. So, so that's what we did this year.
Oh, very cool. Now, just so for those listeners who aren't familiar with prop firms, you said one step versus a two-step program. What's the difference?
So basically, it's the amount of challenges you have to complete in order before you get funded. So we used to work with a one-step program, but the one-step programs, although they have a higher success rate or passing rate, and which is what it's my favorite one, but it's also a more expensive program. So the two-step program is a bit difficult to pass, or it's more difficult to pass than one-step program, but it's more affordable. So a lot of traders prefer to go into the two-step program to put that effort in, and then they can, it's more affordable, and then the accounts they start working with are larger than in the one-step program. So that's pretty much the difference. Like the one-step program is easier to pass, let's call it that way, but it's more expensive, and you start working in smaller accounts. And in the two-step program, you work harder, but the reward is also higher.
Okay, so what are the different steps? You said one
Um,
step and two step. Or is it just levels?
yeah, levels. So in the
Okay.
one-step program, you need to hit like 10% target, and that's it. You're funded. In the two-step program, you need to hit 8% one time, and then 5% the second time, and then you're funded.
Okay. Okay.
So
So
that's
it's like one qualification versus two qualifications.
correct.
Okay. All right.
Yeah.
Huh. Very cool. Well, and thank you for clarifying that. Now, so that's what you've had going on. What do you have on the slate as far as things you want to get going in 2024?
Yeah. I don't. I can't. Disclose everything, but we're going deeper into education. Okay, so we really want to build like an education sphere or something, to because a lot of traders request or ask us,
Mhm.
we're not in the education business, and we're not doing that currently. And a lot of our educators or our traders are seeking for education.
Mhm.
So, and we do not provide that. So we send them to our partners, we call it. So we'll start putting like courses from our partners and some of courses, from ourselves in one place, in one hub. So traders seeking for education can have all that education that we trust in one place, because you go into YouTube and maybe you're aware of that, Brian, but you will see
Oh yeah.
Lamborghinis flying, and it's hard to, it's very overwhelming and confusing, and you don't know where to start. So we're going to put all the education in one place for our traders.
Nice.
And the second one, we're going into more like also, gaming and competitions, and we're going to start running like yeah, like fun things like competitions, trading competitions, and all kind, yeah, that kind of things, in order to bring like more traders into the company to to discover us, to find about us.
Yeah, very cool.
Yeah.
Yeah, I'm curious to hear you say, or it's exciting to hear you say the competitions.
Yeah,
The, the popularity of the competitions kind of comes and goes, but they're a lot of fun.
yeah, they are fun.
Just seeing the different methods that get popular and are successful. Um, no, I know several years ago, during one of the spells when they were pretty popular, it seemed like the zigzag patterns would, I mean, that's what all the winners were using. And they were just, it was crazy successful. And then it was a little shift away from it. And, of course, there's a few other things that are, gaining popularity now. But yeah, as far as like with AI and everything, we'll see if the AI can help come up with some new
Yeah,
strategies,
we'll see.
make it work. Very cool. Well, now one thing I got to ask, just because this is the Consistent Profits podcast, what do you see as probably the primary obstacle or mistakes that traders make that keep them from realizing consistent profits?
I would okay. Okay. There's several factors.
Mhm.
First, traders come with the wrong expectations to the market, with unrealistic expectation of what's doable. Okay. So I think once you with the wrong expectation, I think that's like the root. And then the symptom is, over leveraging, over lot sizing, and all of that, tends to blow the accounts.
Mhm.
And this is something I talk a lot in, in the office. I study a lot our higher funded traders. We can offer our traders can grow into millions of of dollars under management.
Mhm.
And I tend to, it's like you have fewer and fewer managing larger accounts. So I tend to go in a closer relationship with those traders. So I talk to them and I learn them, and because we want to be very, very careful with what are they doing, because they're managing a lot of capital for us. And when you talk to them, you find out they all do different things. They trade from different places in the world. They trade different strategies and different approaches into the market. But they do things, they have certain patterns that are very, very simple, but many traders or most traders are not doing those simple things.
Oh, yeah.
So one of them, for example, is mastering what they do. If you talk to these traders, they know inside out, like your inside out trading. Okay, they know inside out what they do. So they know exactly when they should be trading, when shouldn't be trading, how much risk to take, what's an A pattern, what's a B pattern, a high quality setup, low quality setup. I mean, everything, the time they should be trading. So you just realize they master one strategy or different strategies, but they master what they do. And that's very, very important, because traders, a lot of our traders, they don't understand as deep what are they doing, or when should not be trading, or they start looking for different strategies. And then you see they have different accounts with us that they haven't been successful with those accounts. And you see each strategy or each account with a completely different behavior in it. Okay, different trades, different lot size. So you see how inconsistent they are. So our best traders master what they do.
Yeah.
Our best traders journalize. They record. They really keep track of what they do, of the trades, of themselves. And then that process of journalizing everything, they give them a lot. It's like a mirror. It's really like a mirror of what you do, of how's your trading, how you're doing yourself as well. So they do a lot of things.
Mhm.
Of course, they deal with losses. They know when to take those losses. They work with stop loss. So it's not something, that this is not new to anyone, but it's just these guys are doing this in a disciplined way, consistently. And most of other traders are just trying to, make, one home run instead of many singles, if we go into baseball. So that's the difference.
Yeah. Well, I'm glad to hear you bring up the whole mastering thing, because one drum I've been thumping for years is, and like you said, it's expectations. So many people look at trading and it's like, oh, easy, I can do that. And it's like, no, this is a game of skill.
Yep.
And with a lot of the prop firms, especially when I hear somebody, bashing prop firms saying, oh, they're just looking to rip everybody off. It's like, no, all they ask is really what any trader should be asking of themselves anyway. And that is, show up demonstrating that you can make money trading. That's all
Yeah.
they're asking for.
Mhm.
And show up. And if you've got the skills, cool, they'll give you the funds to trade. But if you don't have the skills, it ain't going to work.
Correct.
And so, yeah, it's a game. It is totally a skill based occupation. It's performance based.
Performance based. Yeah.
And so, yeah, if you're showing up and you've got the skill, you've got that level of competence and expertise or mastery, like you're talking about, yeah, trading. Well, the other thing, speaking of psychology, one of the other things that's a favorite of mine is, a lot of people that say, trading's so emotional and everything. And it's like, no, trading, when you reach that level of competence and mastery, it's no different than any other job.
Correct.
You show up and, some days are better than others.
Yep.
You enjoy the good days, bad days. It's like, okay, but nothing wrecks your life. It's emotionally no different than any other job because you know what you're doing.
Correct.
And so, yeah, the focus on that hitting that level of mastery and mastering what they're doing. Yeah, I'm 100% with you on that. So
But
very,
what's the challenge, Brian?
yeah.
That process is a long process. In order, like professional athletes and master, it takes it takes years. In my experience, it's not, it's not like you can become a training master in, I don't know, in a couple of months. In my experience, it takes a year in order to get to that level. And most traders, at least most of the traders that come into us, they're not willing to go into that process. They just want like the shortcut into the success. So that's why they come and they try to make, one good trade, over leverage, try to make money, and that's it. They don't want to go into that process of mastering, which would be much more rewarding in the long term than trying to, make it once.
Oh, yeah. Well, the flip side of that One of my favorite quotes from Jim Rohn. He says, "Don't wish that it were easier. Wish that you were better."
Yeah.
And the cool thing about it is, like you're talking about, yeah, you put in the time, you focus on mastering it, things get easier. It
Yeah,
just everything gets easier as you skill
it
up.
is.
Things get easier. So if you want the easy button, skill up. Yeah.
Yeah,
So yeah, very cool, very cool. So when somebody comes to the fibers, um,
yeah.
so what usually is like the process that people go through when it come to you? What's the experience like?
You know, we have thousands of traders and thousands of experience. Um, but you asking for those who make it or those who fail or what?
No,
Maybe.
just for like our listeners today, if they're curious to what it's like to come work with you,
Yeah.
um, what's the
So
process like coming on board and getting started with you and all that.
first, I truly believe it's an incredible opportunity. You know, Brian, when I raised capital from investors, it was a nightmare. It was super stressful, you know, because then they will call you and they will email you and what is this loss and what happened there. It's very, very, very stressful. And today, having this opportunity of managing someone else's money and large money, you know, it's good money.
Mhm.
It's unbelievable. Um, and what we attempt to do, and this is what we do every, you know, we're coming to work with this mantra in our heads. How can we provide more value to our traders today? Um, so you come into the fibers, you will first become part of a community that it's going to be there for you. You know, traders choose to take advantage of that. Other traders, you know, choose not to do that. But it's going to be there. You're going to see a lot of resources available for you. You know, in the hub, you will see tools and webinars and courses and all kind of resources for you available. And of course, the accounts, the our evaluation programs, which they have built in the risk parameters we're expecting from our traders to, you know, to trade by. So instead of going into that process of, okay, what risk parameters should I be applying or what's good for me or that we have implemented that into the programs already. So some programs they have, you know, daily pauses. Okay, if you're taking too much risk in one single day, will pause you. You can come back fresh tomorrow, for example. We have programs with a stop loss requirement. So you will have to place a stop loss, which is a good habit. That if you don't have that, you know, that in place as a rule, it's very hard by yourself to apply that. So we'll try to, you know, to have in place the risk parameters already for you, and that will be very, very beneficial for you. And of course, the opportunity to scale. You know, when you grow in your own retail account, you work hard, you grow it, and then you have this dilemma: do I withdraw my profits or do I scale? Do I grow my account? So we solve that problem already because we're giving the opportunity to withdraw profits and at the same time to scale your account. So you don't have to choose between the two. So I think that's you will see a lot of value and opportunity when you come with us.
Right. Very cool indeed. And the best place to connect with you is just at thefibers.com, right?
Yeah, thefibers.com. If you want to reach out, there's, you know, go to the website. There's help at thefibers.com. That's the email of the company.
Okay.
Um, and social media, YouTube, you know, happy to connect.
Okay. Very good. Very good. Well, I tell you what, I really appreciate you taking the time out of your day for this today, especially considering, yeah, it's where you're at. It's like evening for you now. Uh, so yeah, thank you again for doing it, and for everybody that's listening today. I applaud you for taking time out of your day to learn and develop yourself as a trader. Glad you're here. If if you think prop firm trading, funded trading is might make sense for your goals with your trading and everything, and you like what Saul has to say here, definitely swing by thefibers.com. The link will be down in the description down below in the show notes. And go ahead and connect with him. Take a look at what he's got, and if it makes sense, go ahead and take action on what you've heard today. Don't just have this be, a podcast where it's like, oh yeah, that was fun, and then you forget about it, and it's just lost. Go ahead and act on what you've heard today, and take action, so that your trading becomes better. Because you're trading for a reason. And if this will help you, if Saul can help you become a more successful trader, then cool. Act on it and make it happen. So let's go ahead and wrap things up. Again, Saul, thanks for taking the time out of your day and being here. Appreciate
Thank
it.
you very much, Brian. Thank you.
Again, everybody, if you enjoyed this, make sure to subscribe to the podcast, and we'll see you on the next episode of the Consistent Profits Podcast. Cheers.
Bye-bye.
Thank you for joining us today on the Consistent Profits Podcast, brought to you by Inside Out Trading. Make sure to swing by InsideOutTrading.com and pick up your free copy of Break the Cycle, 10 things you can do to stop reinforcing the past and get your trading on the right track. If you enjoyed the show, make sure to subscribe on your favorite channel, and we'll see you on the next episode. Cheers.